Spending 80,000 euros on a watch in 2026 is not merely a purchase, but a declaration about identity, capital allocation, cultural literacy, and one's philosophy of time itself. The first dimension to explore is the macroeconomic landscape in which such a decision would unfold, because no acquisition of this magnitude exists in a vacuum, but rather within cycles of liquidity, inflation, interest rates, geopolitical friction, and consumer sentiment that shape discretionary luxury demand across continents. After the post-pandemic surge that propelled secondary market prices to euphoric heights, the correction that followed reminded collectors that horology is not immune to tightening monetary policy. And as central banks recalibrate borrowing costs while global wealth concentrates unevenly, high-end mechanical pieces increasingly function as hybrid assets, part emotional indulgence, part portable store of value, particularly in an era where tangible goods can hedge against currency debasement more elegantly than volatile digital tokens. Therefore, before even considering aesthetics, a prudent buyer in 2026 must assess equity market valuations, property exposure, entrepreneurial risk, and cash flow stability, asking whether 80,000 euros represents surplus capital or leveraged bravado, because opportunity cost is real, and capital deployed into a wristwatch is capital not compounding elsewhere. Yet paradoxically, scarcity-driven maisons continue to cultivate constrained supply, meaning that while speculative froth has cooled, structural demand for elite references remains supported by long waiting lists, private client networks, and strategic allocation practices that favor relationship depth over transactional spontaneity. The second perspective concerns brand power and the hierarchy of prestige, since the name on the dial profoundly influences liquidity, cultural recognition, and long-term desirability. Acquiring a steel sports model from Rolex signals resilience, mainstream status, and historically strong resale dynamics, whereas a perpetual calendar from Patek Philippe embodies generational stewardship and old-world gravitas. A royal oak by Audemars Piguet communicates design iconography fused with avant-garde credibility, while an avant-garde tonneau case from Richard Mille projects technological bravado and elite athletic endorsements. Classical connoisseurs might gravitate toward the restrained elegance of Vacheron Constantin. Independent enthusiasts could champion the chronometric innovation of F.P. Journe. German purists may prefer the architectural finishing of Elan and Sona. Design-oriented buyers could consider the sculptural refinement of Cartier, and pragmatic luxury seekers might analyze offerings from Omega. Each house carries distinct production volumes, narrative heritage, and collector psychology, and understanding these nuances is essential because brand equity can amplify or erode financial resilience over a decade-long horizon. Third, one must evaluate the asset thesis with sobriety rather than fantasy, recognizing that not every expensive timepiece appreciates and that survivorship bias distorts perception when social media amplifies only extraordinary auction results. While select references have outperformed traditional benchmarks during specific windows, watch values fluctuate according to rarity, condition, provenance, box and paper's completeness, service history, and shifting aesthetic trends, meaning that liquidity is selective and bid-ask spreads can be substantial. Transaction costs, dealer margins, platform commissions, insurance premiums, servicing fees erode theoretical gains, and taxation regimes vary depending on jurisdiction. Furthermore, the secondary market in 2026 is more transparent than ever due to data aggregation platforms, making mispricing rarer and arbitrage opportunities thinner. Therefore, an 80,000 euro acquisition should be justified primarily by personal conviction rather than speculative expectation, with any appreciation treated as an ancillary benefit rather than a central premise, because markets reward patience, discipline, and rarity, not impulsive hype cycles. The fourth angle revolves around craftsmanship and intrinsic horological merit, examining whether the movement architecture, finishing techniques, complication complexity, and material science genuinely warrant the capital deployed. Haute horlogerie at this level often involves hand-applied anglage, black polishing, interior beveling, free-sprung balances, column wheel chronographs, minute repeaters tuned like instruments, perpetual calendars calculating leap years until 2100, or tourbillons designed to counteract gravitational variance. And the intellectual pleasure derived from understanding these mechanisms can justify the expenditure for those who appreciate mechanical poetry. Beyond mechanics, case metallurgy, from platinum heft to proprietary alloys, Dial artistry, such as Grand Fou enamel or guilloche, and bracelet engineering influence tactile satisfaction. In 2026, sustainability considerations also matter, as traceable gold sourcing and responsible supply chains increasingly shape brand narratives, meaning that ethical production may add intangible value to the ownership experience. Thus, the question becomes whether the watch represents a triumph of engineering and artistry, or merely an expensive badge lacking technical distinction. Fifth, lifestyle alignment must be scrutinized with honesty, because an object of this magnitude should integrate seamlessly into daily rhythm, rather than languish in a safe. Consider wardrobe synergy, professional environment, travel frequency, security concerns, and emotional comfort wearing a visible symbol of wealth in diverse social contexts. Some individuals thrive on the quiet confidence of a discreet complication under a cuff, while others prefer bold case architecture that sparks conversation. Maintenance logistics are also relevant, as service intervals can cost thousands and require months without the piece, necessitating either a diversified collection or acceptance of temporary absence. Insurance coverage, storage solutions, and international customs declarations further complicate ownership, so the buyer should ask whether the joy of glancing at the dial throughout ordinary moments compensates for administrative complexity and latent risk. Sixth, psychological and sociological factors exert subtle yet powerful influence over the decision, since luxury consumption often intersects with status signaling, community belonging, and narrative construction. Wearing a revered reference can unlock access to private events, collector circles, and dealer relationships, yet it may also generate external expectations or internal pressure to curate an image. Aspirational purchases sometimes mask deeper desires for validation, and clarity about motivation can prevent post-acquisition dissonance. Conversely, for genuine enthusiasts, a significant watch can serve as a milestone marker, celebrating entrepreneurial success, commemorating a personal transformation, or honoring family legacy, thereby transcending materialism and becoming a vessel for memory. In this sense, value extends beyond spreadsheets into the realm of symbolism, where timekeeping becomes metaphor, and the ticking movement echoes one's journey. Finally, the strategic framework for concluding whether buying an €80,000 watch in 2026 is a good idea rests on synthesizing financial prudence, brand intelligence, mechanical appreciation, lifestyle compatibility, and psychological awareness into a coherent verdict tailored to individual circumstance. If net worth renders the amount proportionally modest, if the chosen reference possesses enduring desirability rather than ephemeral hype, if craftsmanship inspires sustained fascination, if daily life accommodates secure enjoyment, and its motivation arises from authentic passion rather than competitive comparison, then the acquisition can represent a rational indulgence blending art, engineering, and portable heritage. However, if funding requires debt, if expectations hinge on rapid appreciation, if knowledge of horology is superficial, or if social validation is the primary driver, restraint may prove wiser. Ultimately, the merit of such a purchase in 2026 depends less on the object itself and more on the alignment between capital, character, and conviction, because the most valuable complication any collector can possess is discernment. And so, as you stand at the crossroads between reason and desire, between capital preservation and emotional fulfillment, remember that an €80,000 watch in 2026 is never just steel, gold, or sapphire. It is a reflection of your priorities, your discipline, your taste, and your relationship with time itself. If this analysis helped you see beyond the hype and into the deeper mechanics of wealth, identity, and craftsmanship, then take a moment to reflect before you act. Subscribe for more in-depth conversations on luxury, investment, and strategy. And above all, make decisions that you will be proud to wear not only on your wrist, but in your story.